Hello, today is Wednesday. It is the 23rd day of January 2013. Let's take a quick look at the silver market using three different time frames. First one will be the daily chart. Looking as if we're going to have the 8th consecutive update in a row. The price is at 32.44 as of 13:21. It's retraced a little bit from that time, but it's obviously changes numerous times throughout the day. Any close above 32.22 would give it that of 8 straight up days in a row, running up towards this running average from this top placed last fall, and looking to make a move towards the 32 and 2/3 area. Also, this one's 32.90, but really the whole range in here as the resistance area. And when you have these moves, you can say, well, it's got to go down today because it's 8 straight days up in a row. Why can you say that at 7 or 6 or 5? So until, of course, there's any signs that thing is going to be ready to roll over, I would expect the same of what's been going on. But at some point, it's going to do that. How the thing will correct would be extremely important. This area here, which was resistance, is a massive area for the hold on that as support. If, of course, we get up towards this area or any area in the upside, once you experience somewhat of a correction, you start to see things start to stabilize on the more shorter term time frames, and you can start to give it credit that that's a pullback and things will be ready to get going for more higher gains. As far as today's short term time frame, this is a 2-minute chart. It's not silver, it's SLV, but 1.03375 shares of silver. And the reason why I have that number is the price difference of SLV is that much shorter. So that will give us the actual silver price. And very common throughout the day, you get these decent-sized pullbacks, which was, of course, the case today. Up from this 32.46 high, down 36 cents, or about a little over 1%. Fibonacci coming through very well, as it had decent resistance at the first level, had a nice little pullback or failed breakdown, maybe, if you want to look at it that way, and then move up to this 61.8, resisted it for a while, lots of support, and then you can see here that as of 13:10 or 1:10 p.m. Eastern Time, that it was looking as if it was saying, hey, wait a second, this whole move is a failure, and we should retest this previous high. Well, that's exactly what happened. It didn't take long for it to quickly move up to 32.48, now back down to about 32.38. So right now, very short term, the 32.32 area would be an area I'd be looking for that to be found as support. Final chart will be the 3-day chart. The 3-day chart will contain last year's February highs of 37.50. The double hit bottom of 26 and change, we'll say 26.11. Actually, it's a triple hit bottom, but with that being said, the support was found here. Then it was resistance on the first fib level. Fast move here where it was support. Then it was not broken below. That area became resistance. Broke through resistance. Thus, it's an area where support should be found if it goes down there. We'll get tied to that later. Resistance here, not found. It was instead it was support, but it was really a failed double breakout for that matter, finding support at the 30 level. So therefore, really holding and staying above here for a decent amount of time should get it looking pretty good. But overall, if it does challenge the 35 area, 36 area, it's going to give a very good setup. That's pretty much about it. Okay, so I'm going to end today's video at that. It's a short one, and thank you for tuning in, and have yourself a great day. Bye-bye.